Start with the big idea. Owning farmland doesn't automatically mean you have farm income. If you let someone else use your land, the default is rental income. The form you pick depends on two things: how the rent is paid and whether you materially participate or provide significant services. On the EA exam, they love giving you a landowner fact pattern and asking which form gets the income. If it's a flat cash amount and you're basically hands-off, think Schedule E. This is classic rental real estate style reporting. Rent in, expenses out. The key exam phrase is no services provided. In that case, it's generally passive rental income and it's not subject to self-employment tax. Don't let the word farm trick you into Schedule F when it's really just rent. Crop share rent is different. Here, the tenant pays you a percentage of the crops or the crop proceeds instead of cash rent. If you're the landowner and you do not materially participate in the farming operation, you usually report that crop share rental income on Form 4835. It's still treated like a rental activity, just with its own special form. The tenant farmer, meanwhile, reports their farming results on Schedule F. Now the twist. Material participation can flip rent into farm income. If you materially participate in the farming activity on your land, the rent is treated as farm income and goes on Schedule F. Think hands-on involvement in operations, not just collecting checks. EA exam tip. When they describe daily care, management, or regular labor by the landowner, they're pushing you away from Schedule E or 4835 and towards Schedule F. Use the examples to lock it in. Harold rents pasture, but he feeds and cares for the cattle every day. That's services plus material participation. So Schedule F. Norris rents pasture for a flat cash amount and does nothing else. So Schedule E. Rachel gets 25% of the harvested beets and doesn't do the planting or operations. So she reports on Form 4835, while the sharecropper reports on Schedule F. A quick decision shortcut for test day. First ask, cash rent or crop share? Cash rent with no services is Schedule E. Crop share with no material participation is Form 4835. Then ask, did the owner materially participate? If yes, override the rental treatment and go to Schedule F. If you follow that order, you'll avoid the most common trap, assuming all farm-related income belongs on Schedule F. Marissa is an 8% limited partner in a vineyard partnership. She doesn't participate at all. She's only an investor. She sells her entire partnership interest to an unrelated party and stops being a partner. She has $18,000 of suspended passive losses from this activity. What happens to those suspended losses on her individual return? Are they still suspended, deductible now, limited to $3,000, or only usable against capital gains? Think about it. The correct answer is, she may deduct the suspended losses in the year she disposes of her entire interest. When you fully dispose of a passive activity in a fully taxable transaction to an unrelated party, the suspended passive losses are released. A tempting wrong choice is that they stay suspended until she has passive income, but that's only when she still owns the activity. Here's a rule-based question. A closely held corporation can qualify as a real estate professional if more than what percentage of its gross receipts for the year came from real property trades or businesses in which it materially participated? The options include 50, 90, 40, and 80%. Think about it. The correct answer is more than 50%. That's the threshold for this closely held corporation rule. Over half of gross receipts must come from real property trades or businesses where it materially participated. A tempting wrong answer is 80 or 90% because it sounds stricter, but the tested number is 50%.